Welcome back, all you crypto hooligans. Hey, how's everybody doing tonight? So yeah, we're looking at the Vechain weekly chart, and Vechain is looking very steady and stable, touching the lower trend line that we entered back on in March of 2020. Yeah, I do believe that VeChain is primed and ready for further upside. As you guys know, the crypto markets go down and up and down and up. So, in a very simplistic sort of overview, higher as the crow flies perspective, there's only one way to go from here, and it's upward. So hopefully, I'm just continuing to accumulate here. VeChain down at around 7 cents, so great deal. The Let's just touch base on the market mover, Bitcoin. So Bitcoin has been in this crazy descending triangle pattern, with the RSI also forming a symmetrical triangle. So something is going to happen very soon, either upwards or downwards. I really thought that it was going to happen yesterday, but the markets, are just continuing to hold strong. Bitcoin trending sideways. So the upward target for Bitcoin is 60K, and to the downside, it'd be just around 20,000. So on the DXY today, we touched base on this yesterday. The DXY has been, and this is the weekly chart, by the way, the DXY is, experiencing a downward trend with resistance, and that it has touched, and this will make the third time. So actually the fourth time. We touched it twice back here in November, came down, touched the lower trend, and came back up for another touch, and then we just hit it again, experiencing further resistance. So this is a good sign for Bitcoin. As many of you guys know, and I've talked about this on the channel before, the DXY and Bitcoin have a inverse relationship or negative correlation. Bitcoin is often considered, an alternative to gold, while many analysts believe Bitcoin can replace gold. It will not replace US dollars, at least not in the next couple of years. So, and that is the overall goal of decentralization. And for those history buffs out there, gold has outlived fiat over time and throughout history. So that's just something to keep in mind. And Bitcoin is the new digital gold, right? So, but Bitcoin drives massive outflows from investors holding gold ETFs who move their wealth into risk-on assets like Bitcoin and other cryptocurrencies. In this way, the scales often tip toward Bitcoin, which then Bitcoin begins to behave like gold in its relationship to the US dollar. So, yeah, that is sort of the basic fundamental reason why there's an inverse relationship. Another reason for the inverse or negative correlation between Bitcoin and the DXY is that Bitcoin is not being uniformly represented across, traditional markets or portfolios. And this can be good for Bitcoin price as a hedge against the US dollar. For example, as investors adjust their risk tolerance in their portfolios in times of high inflation or sudden spikes in interest rates, they will move away from treasury or money market assets, allowing the flow of this capital to move into alternative commodities that hold the promise of a store of value, meaning they can hedge their investments against the decreasing value of the US dollar. On the flip side, though, this can be bad for Bitcoin and crypto investments when there's a rise in the value of the US dollar. As the central banking system takes action to deal with fluctuations in the economy, such as that happened back in March 2020 during the pandemic, money printing often leads to fears of rising inflation. This fear in the markets causes volatility in risk on assets like cryptocurrencies. This fear will often swing the narrative back to precious metals, which are known for their value preserving properties. Yeah. So in this example, money printing and the effects of things like the coronavirus pandemic, they just shred the U.S. economy. And subsequently, government interventions and needless money printing have a negative impact on the US dollar and causes the DXY to dump. This plunging DXY feeds a hungry Bitcoin, which often soars from the teen thousands to the over 60,000s in just a few months, as we saw recently. And, to highlight the obvious point here, store of value assets usually rise on a weaker USD or DXY. So the Dixie, a lot of investors use the Dixie to, see sort of what's going to happen with Bitcoin. So I will make one last point about the inverse correlation between the Dixie and Bitcoin, because the relationship between the two is sort of like, the chicken and the egg quandary, right? What I mean is that Bitcoin impacts the DXY sometimes, and other times the DXY impacts Bitcoin. And they will, switch being the leader in this follow the leader game. And when markets run too hot, and risk on assets like cryptocurrencies become, overvalued, such as we saw a couple months ago when Bitcoin, reached up into the 60s. Deep corrections are expected, and traders get fearful. So any hint at a dip, and investors start cashing out all their risk on assets back to US dollar and causing the Dixie to rise. So that's basically a long way of stating that the recent resistance here on the Dixie chart is good for Bitcoin and the rest of crypto markets. So so that's good. And what is interesting about the DXY is that in a downtrend, we're in this downtrend right now, but so is Bitcoin. So I do believe we're entering a critical impasse here. And there's just a lot of other issues impacting these markets than just the fluctuating valuation of the U.S. dollar, of course. But a downtrend on the Dixie is a good sign for Bitcoin. So Cardano still holding strong. This is the weekly $1.33. Engine Coin looking like it had a look, wants to break out here. We saw a little bit of an increase over the past couple of weeks. Engine Coin doing big things with their new platform. So I'll be interested to kind of see what happens with Engine Coin over the next couple of months. So Shiba Inu, with over a few million total value locked after the launch of their Shiba swap platform, the price is definitely pulling back a little bit. And there's just such a huge supply that I think that even though there's a ton of people staking Shiba now on the Shiba swap DEX, it's just gonna take a little while before there's enough supply staked to start to impact price. So Shiba Inu sort of nothing major, still holding strong. Polkadot, Polkadot is looking just trending sideways, but it is making higher lows on some of the higher time frames. So Just holding a steady pattern here at around 1543. I noticed today that there was some upward momentum coming and some higher lows being printed, but again, these are on shorter time frames, so who knows? Really doesn't mean much until we can start to put together, a larger trend. So yeah, so in the I wanted to start, since we're talking about Bitcoin, I wanted to touch base on, analyst says Bitcoin choppy price action is typical of low liquidity markets. So, as many of you guys know, the volume in the markets has just been very, very low recently. And Ellie Larest, a partner at digital asset management firm Exo Alpha, recently pointed out that the non-directional trend in Bitcoin is fundamental to a decrease in trading volume and is typical of low liquidity markets. The rest went on to say in this article that this lower volume has led to more wild reversals within the range, hurting directional traders. And he said, quote, "Inside this range, we are witnessing pumps and dumps with prices slowly grinding higher before being quickly slammed down, which is typical of low liquidity markets." So Larest is witnessing investors sitting on the sidelines as they wait for Grayscale Trust to stop offloading their Bitcoins and for the Chinese regulatory crackdown to cool off. So basically saying that, people just aren't doing anything right now. But Larest followed up with a comment that, speaks to the accumulation taking place by whales in the space. Saying that despite these elements already priced by the market, we continue to witness strong Bitcoin adoption by traditional asset managers looking for a good entry point to be positioned for the next leg up. So it's just something to keep in mind. Whales are accumulating, and my philosophy is, swim with the whales, right? So if you want to become a whale, act like a whale. So, down here, the Wolf of All Streets, Scott Melker stated that if Bitcoin price drops, I will buy more. If Bitcoin price goes up, I will also buy more. That is the beauty of dollar cost averaging. So this article also points out that another bullish indicator, and this one here, the entity's net growth. So this bullish indicator is being highlighted by analysts in the space, and it is the entity's net growth Bitcoin metric, which has climbed to new highs in recent weeks as the price of Bitcoin continues to sputter down below 34K. So I did pull up the chart here on Glassnode. The entity's net growth indicator is the net growth of unique entities in the network. So this metric shows the number of new entities coming into the Bitcoin network per day, along with the price as a comparison. And as you can see here, the number of people coming into Bitcoin is going parabolic and has just met the price on the chart here. So a rise in the number of entities entering the space is basically can be defined as a clear indication of a healthy and consistent adoption of the asset, in this case, Bitcoin. So this is a Glassnode chart, and this metric is a little misleading. So it does come with a disclaimer, and I'm gonna point it out here for you guys, and hopefully I'll try to make this fast for those of you who just fall asleep when we start talking about data. To understand the meaning, behind these numbers, we have to understand how Glassnode arrives at them, because it does not represent, like the number of daily wallet addresses or anything like that. It uses the number. It does use the number of wallet addresses created every day, and uses it to identify, those numbers of entities that appeared for the first time in a transaction on the Bitcoin network. So basically, Glassnode, what they do is they cluster these addresses using AI software to identify what is ultimately measured as entities entering the space. And they use a distributed equation to arrive at the resulting number of actual new entities and take a fraction, in this case approximately 28% of the actual number of new wallet addresses in the network. The result is a graph that shows the number of new entities coming into Bitcoin network per day, and comparing that number to the price to show the impact of that adoption on the price over time. Even though we're seeing more entities coming into the space, it's not really having an immediate impact on the price. But, however, if we do a comparison to this chart to actual wallet addresses, we can see that there is a big difference between the two. On this chart, we see active Bitcoin wallet addresses. And these are, this is price, and this is the orange line is the active number of wallet addresses. So notice that there is a huge drop in actual wallet addresses. Why would this be? If there's a steady increase in new entities entering Bitcoin as an investment, why would the overall actual wallet addresses be dropping? And that was a question that a few people asked me over the past couple of days. And what I found is that I went through the Bitcoin blockchain, and I have the Excel spreadsheet right here. So here's the top 30 Bitcoin wallets. And so they hold approximately 20% of the entire Bitcoin supply. So we've got, the top 30 wallets holding 20% of the total Bitcoin supply. And when we look at the trends for those Bitcoin wallets that hold more than $100,000 or better in Bitcoin, and let me move to another chart here. So this chart basically shows the wallet addresses that hold $1,000 or less. And then the green line is the wallet addresses that hold the blue line is the wallet addresses that hold 100,000 or better. And then the green line is the active number of wallet addresses. So what we can see by looking at this is that that there's been obviously a decrease since we reached the all-time high here at 60K, right? I mean, we know that people are leaving the space or whatever. But however, they have been decreasing, the wallets that hold $100,000 or better are only decreasing marginally compared to those wallets that hold a lot less. This shows that the overall Bitcoin wallets holding less than $1,000 worth of Bitcoin decreased from 7.2 million addresses to 5.4 million addresses since we started this dip. And what this shows us is that retail investors are selling, as we know, and whales are accumulating. So this is clear evidence for a very notable historical socioeconomic trend where the transfer of wealth moves from the poor to the rich. So yes, I just wanted to point that out. I thought that was pretty interesting. And then the last chart, the last chart I wanted to take a look at is the Bitcoin volatility. What's interesting to note about this chart is that, as we can see, price is the black line, volatility is the blue line. And if we look at volatility, as we were in at the beginning of the year, volatility had sort of reached its peak, and when volatility started to go down, the Bitcoin price reached all-time highs. And so this pattern, continues throughout the chart, and it's a little bit harder to see, in where the price is sort of, flattened in perspective, to the more recent trends upward, right? So it's hard to see the ups and downs prior because we just went up so high this time. But if you look at the beginning of the year, volatility was decreasing and the Bitcoin price went all the way up to 63,000. And then what we see here right now is that we've sort of reached a local top with respect to volatility. And I stopped moving my cursor over there because it kind of blocks off the lines. But if you look at the current downward trend of of volatility, the Bitcoin price right now is sort of meeting it, and in places where it has met before, price usually goes upward. So I just thought that was something to point out. Volatility currently going down. So that could be a good sign for us here. It doesn't mean that it's going to continue to trend down. It could just move up from here, for all we know. But it does seem to follow a pretty consistent pattern. It goes up, it goes down, it goes up. It doesn't seem to have a lot of little peaks where it sort of changes direction very quickly. So so hopefully volatility will continue to decrease a little bit, and we can see some further price increases. So in the news today, I am going to start with Vechain. And as many of you guys know, I am just a Vechain bull, right? I'm just very bullish on Vechain. I think it is very undervalued. It has a lot of enterprise adoption, and this project has just probably some of probably the strongest fundamentals out of a lot of the projects that are out there. They just have a lot of partners, and they're one of their main partners, DMV. They're just so well connected globally that the partnerships are just going to be endless, through that relationship. So Vechain partnership will enable vet holders to buy on eBay, Amazon, and others. So the Vechain Foundation has announced a partnership with Shopping.io, an e-commerce platform of international scope that has been integrating crypto payments. So in addition, vet holders can benefit from a 2% discount on all items from electronics, novelty, everyday items, and more. The discount will be available for the next 2 weeks as of today. So Vechain is an absolutely huge accomplishment for Shopping.io. Because of their passionate community and longevity in the space, we are excited to see what more the future might bring through this partnership. So the platform has 2 native tokens of its own, SPI and GSPI. It looks like Shopping.io is making big moves. As you guys know, recently Shopping.io had also onboarded Shiba Inu, which Shiba Inu saw, an increase in their price action following this announcement. So Shopping.io making big moves, partnering with Vechain. I am definitely happy to see that, and hopefully Vechain can continue their momentum for mass global adoption, and once we sort of break this Bitcoin trend, I do believe that Vechain is going to see much further upside. So just one of those projects to keep an eye on. So out there in Asia, again, there's a little bit more China news. I just wanted to keep you guys updated on what's happening. China opens digital yuan whitelist for 10 million citizens. So So it appears that the government of China is expanding the testing of its CBDC. According to reports from an officer of the People's Bank of China, it opened a whitelist to further experiment with the digital yuan. Citizens interested in being a part of this initiative can request their inclusion in this new trial phase at select state banks. More than 10 million citizens are already on this whitelist. However, the extent of this test and how the digital yuan will be distributed have not been clarified. While the digital yuan has been tested in several cities, its acceptance is still far from being ubiquitous. China is ramping up the volume of users and currency in these tests, intending for the digital yuan to be used in the next Winter Olympics. So, as a consequence, the government of China is moving to clean. Oh, so yeah, this was, the whitelist program is just the latest of the stages of the People's Bank of China has executed. Earlier this month, Beijing and Shanghai started giving away red envelopes of digital yuan to their citizens. These two cities will give out more than 500,000 red envelopes. However, these tests might not be getting all the attention the government wants. According to some reports, people are hesitant to switch from known payment methods to the digital yuan or yuan. As a consequence, the government of China is moving to clean house. A ban on cryptocurrency mining and trading is now in effect in several key provinces. Yunnan, Sichuan, Qinghai, and Inner Mongolia have ousted miners from their territories. This gave rise to a mining exodus that is affecting the operation of the Bitcoin blockchain. Also, the government has acted against established companies involved in the crypto business. This is the case of Beijing Quado Cultural Development, a company that has shut down for its alleged participation in providing software to facilitate crypto transactions. So China trying to push their CBDC. Yeah. So I do think that this is just the first of many countries moving to a digital fiat currency. So Japanese regulator reports suggest DeFi regulations could be coming. So I'm not going to spend too much time on this because, Japan has just got a hard on for decentral, for DeFi and cryptocurrencies. They've made some big moves though, allowing Coinbase to open an exchange there. They've granted Engine Coin the ability to trade in Japan. So they're not totally against cryptocurrency. I'm not too concerned about this. Obviously, like they want to understand what DeFi is, how is it going to impact their monetary system, and we're just seeing such a large surge of user adoption into DeFi and other crypto platforms that, obviously governments and centralized banking systems are going to get nervous. So the FSA, the Japanese financial securities, whatever it is, explained its stance on DeFi thusly. A decentralized financial system based on blockchain technology has the potential to enable peer-to-peer financial transactions without the need for intermediaries. Although this kind of decentralized financial system can offer a variety of opportunities and benefits, it could also undermine policymakers' ability to enforce existing regulations. The FSA began policing the crypto sphere in earnest in 2017 when Japan became one of the first countries in the world to adopt a permit-based system for crypto exchange operators. The agency has since tightened its control over the sector in the wake of the CoinCheck hack of early 2018 and holds regular policy forming sessions, often involving members of the domestic blockchain and crypto industries. So yeah, there are more articles on this if you guys want to continue reading on this. Bank of Japan identifies DeFi pros and cons, mentions Sushi Swap, and Uniswap, and Japanese pro crypto MP spells out vision of crypto NFT regulatory future. So yeah, so there's more stuff on this. I don't think it's anything to be concerned about. It is just Japan trying to understand what they need to do to prepare for the spread of DeFi across the globe. If you're investing, just be careful. But I do think that something is going to happen very soon. It does seem like there's a lot of it seems like volume is picking up a little bit, not a ton, but Polkadot has been, it gets these little surges and then it dumps. We've seen this happen between July, over the course of the July 4th weekend and into Tuesday and Wednesday of last week, where it just surged up and then dumped, and then it'll surge up and it'll dump, not dump or just dip, And I think they're all doing something similar. Vechain right now is on its way up. So I mean, good. It's definitely something you could probably trade. If you're swing trading or stuff like that. I mean, you can definitely trade this, but who knows when we're going to get a catalyst. So right now, Bitcoin is putting in some high higher lows on the lower time frames. So yeah, so that's it. That's all I got for you guys today. Not much else to talk about out there. The market's we're just sort of waiting, right? Everybody's just waiting. What is going to happen? When is it going to happen? Yeah. So, I mean, what are we going to do? Right? Accumulate DCA. That is the best thing to do. Just DCA, right? That is not financial advice. I am not a financial advisor. I'm just saying DCA is a strategy in crypto investing where you just buy a little bit every week and the price averages out over time. So yeah, have a great weekend and see you guys tomorrow. Just want to take a minute to say welcome back to the channel. Thank you all for supporting the channel. And I am not a financial advisor. Anything I say cannot be used against me and should not be used for trading purposes. This video